Let's talk about stocks in news. Jet Airways has failed to repay a consortium of Indian banks led by State Bank of India. The ongoing cash crunch and the financial stress pushed the private carrier to default on a loan which was due in December. So is there light at the end of the tunnel for the airline? Let's ask Ashish Shah of IDFC Securities, who joins us right now on the phone line from Mumbai. Ashish, good having you. Thanks much for joining in. What did you make of the news? How grave or not grave is this development?
Yeah, hi. Good morning. In the context of what has been happening in terms of the crude prices rising substantially, this is something which was obviously the writing was on the wall. Jet Airways has been making EBITDA losses for the past several quarters. So and they have a debt of about 2,000 crores, which needs to be repaid over a 12-month period. This is something which was probably, in the sort of pretty much on expected grounds that they will struggle to honor the debt commitments. Having said that, the fact that the lead lender SBI has, gone ahead and ordered a forensic audit of the accounts, if assuming the audit, does not come out with anything negative, I think there is a reasonable probability that they will be extended some sort of a support by their lenders.
The airline, I think, already said that they are in conversation with them. But for the forensic audit to not reveal anything would be a time-consuming process, I would reckon, Ashish. What happens between now and when the verdict about the forensic audit event comes out? There needs to be some resolution between now and then, right?
Right. So the good part, obviously, is that the ATF prices have been falling. The ATF prices for the month of January have, been brought down by about 14%. Overall, we've seen about a 25% reduction in domestic ATF prices. At the margin, as we are in, let's say in January this time, the pressure from the fuel side is obviously receding now. So in that sense, while, the audit takes some time, but the correction in the crude prices and the ATF prices is also probably given some more lifeline to the airlines.
You reckon that while they've been trying to do a lot of plans, including selling aircrafts, capital infusions, stake sale in that loyalty program, and nothing is fructified, even though crude prices have cooled off, one or two or all three of these moves are much necessary for them to be a continuing normal concern?
Absolutely. I think what they definitely need is a significant dose of equity infusion into the company for a permanent solution to their elevated debt problem. So obviously any sort of a lifeline extended by the bankers would be temporary, and if crude were to rise again, then they'll again be in some sort of a liquidity crunch. So I agree with you that, any resolution now will be temporary and should be used by the airline to come to a permanent solution, which in my view has to be a significant dose of equity infusion into the company.
Ashish, now what's the outlook like? Let's work with an assumption that the forensic audit doesn't necessarily reveal anything negative, but Jet Airways is not able to, for whatever reasons, do a meaningful advance into any of these moves that we're talking about. Do the bankers or SBI in particular, is there a possibility that Jet Airways may be taken to NCLT? How high is that possibility? Is that a possibility subject to certain conditions? And if so, what are those?
Yeah, so obviously, if there is no resolution or liquidity support, then, we are looking at, the problem getting aggravated for Jet Airways. But, my view is that, given that Jet Airways still is a strategically important airline for the country, and with the crude prices receding, I would expect, the airline to get, some sort of a strategic support. Given that chance for a revival. So I'm frankly not looking at a scenario where the airline is allowed, to go to NCLT or go to bankruptcy. I'm looking at a scenario where very probably in the near future, we are going to be seeing some sort of a strategic infusion into the company.
Okay, so I'm guessing from your answers that you are a lot more sanguine about the situation that Jet is in, because you do believe 1 or 2 or 3 of the plans that they're trying to pursue will fructify and they will get some bit of a leeway because of the falling crude prices as well.
Yes, I believe that.
Okay, in light of all of these, Ashish, what do you tell your institutional clients who are selectively investors in the Indian aviation space? They may be either invested in Jet, or they may be invested in or looking to invest in the aviation pocket because of the fall in crude prices. What's the advice with regards to Jet and with regards to the other companies that may be within your coverage?
Right. So, as far as, where we stand today in terms of the stock prices, I would be a little cautious merely for the fact that, stocks like Indigo have really run up significantly after the, correction in crude prices started. So, probably I will advise my clients to, get in at a better time, look for a better entry point, because in my view, the correction in the crude prices has got factored in the stocks at this point. And, at the margin, one incremental worry that I have is that the traffic growth seems to have slowed down over the last couple of months. So now we are in a scenario where the domestic capacity growth is about 17-18%. And the traffic growth is about 14%. So we are at a point where, the yield expansion that is widely expected by the industry may not actually happen. So I would, want to wait and see how the, December peak quarter season has been in terms of yields. And given the light that, stocks have run up after the crude price started declining, I would, wait for a better entry point.
A follow-up question to that, Ashish, and the last question on this conversation. For a number of quarters, I've heard a number of portfolio managers speak about how structural this growth in air traffic is in a country like India. We've seen that dwindling a little bit. Is that a serious concern, and is it unpredictable, or would you believe that this is normalization of the trend, but there is still an uptick or uptrend in place on air traffic?
I think what we are seeing is a combination of two things. One, the capacity constraints at the leading airports, especially Delhi and Bombay. So obviously, with two of these airports, barely managing to grow at single digit, tough for the industry to continue growing at 20%. So that's one point. And second, there is some sort of base effect which is creeping in, where we've seen, for several years, we've seen 18 to 20% sort of a growth. So I would say it's a combination of both. And just that at the margin, it adds to a little bit of a worry, because we are seeing a significant amount of capacity expansion at this point. Already, I think in this quarter, we are going to be seeing, load factors across the airlines being lower than what they were either in the previous quarter or the same quarter last year. So we are seeing, some sort of a contraction in the load factors already. So it might, my view is that it might, we might be in this sort of a demand growth for some time now, for about a year. I don't expect the demand growth to go back to 18-20% in a hurry till some of the capacity constraints are taken care of.
Okay. Ashish, lovely talking to you today. Thank you so much for throwing perspective on a bunch of things. Look forward to have you in our studios sometime. But thanks for joining in today.